Hey everyone, what's up? George here from the Millionaire Project. Today we're just going to go over the S&P 500 ETF, which is SPY. You guys know, if you've been here for a minute, that this is what we watch to gauge overall market conditions. And pretty much just going to go over a little market breakdown, what we're looking at this week, what happened, any news events, just covering everything. We're looking at this, like I said, because this gives you an overview of the entire market and what the overall market is trending. So right now, the market has been in a downtrend. We've been bearish for roughly 4 months. This was when the Fed announced that they're going to be raising interest rates. And since then, we've seen markets sort of come down. And then obviously right now we have the Ukraine-Russia situation, which does not help at all either. So coming into this week, very key, we mentioned this in our last video as well, this is going to be the week where we officially hear about interest rates. March 16th is going to be the day the meeting starts. They're going to be raising interest rates 4 to 6 times this year, 2022. And the first official meeting rate hike that they announced 5 official rate hikes. So for those of you that don't know how this impacts everything, interest rates right now are around 0. So the way that interest rates work is that the lower, the better, obviously, because companies have to pay less money to borrow money. So it's cheaper for them. And ever since the start of the COVID-19 pandemic in March of 2020, this is when they dropped and everything was 0 to regulate everything. So they lowered interest rates. That way people were more inclined to borrow money at a cheaper price. And this means that they would likely be spending more. So this also allows businesses to borrow money at a cheaper price, so businesses can have money on hand without having a lot of interest on hand, therefore making the stock market boom. And that is why we've seen these huge rallies. So hand in hand, this also makes the price of stocks go up, just like everything else with inflation. So right now, inflation is the key word that we've been hearing. It's at a 40-year high. And because of this, the Feds are forced to raise interest rates this coming week. Unfortunately, they can't raise it by the full amount that they wanted to raise it. And the reason is because of the Russia-Ukraine situation and how it's impacting the market. So let's just go over and talk about the levels that we've seen us come down to, which the beginning of the correction has been 410 right here. And this has been our critical support that we are looking at coming into this week. Past 4 months, we dropped down to 410 here. Historically, during the times when we're going to have an interest rate shift or the Feds are going to be tapering for the health of the market, we've seen markets come down, 15 to 20%, and this is exactly what happened here. This is another thing that tends to happen around wartime, and we're going through that right now. So the markets are definitely already pricing everything in. So this makes us think here that when interest rates do officially increase on March 15th, we may see a strong bounce from markets because they've already priced in this downturn that we had. Everything that's expected from this meeting has been expected. So investors may be waiting for this to see a huge reversal for us to come back up. You've heard of the whole buy the rumor, sell the news phrase. Well, this is kind of what's going on here, except sort of the opposite. We sold off on the rumor, and now that we're getting the official news on March 16th, investors are going to be looking to buy the rumor back up. So this week, looking at this week, you could see that on Friday last week, this is a daily candle. We opened at a high of around 429 and came down to close around 420. This created a bearish engulfing because it engulfed the Thursday's candle. So this is pointing to a more than likely bearish open on Monday. So going into Wednesday, which is going to be the Fed meeting, we can expect a lot of volatility, which we've seen, and this is going to bring a lot of opportunity. Something to note is that this past week, we've been having a lot more of a slow move. The price action has not been as ideal, so we haven't been able to take too many trades. Although this week, we can expect to pick up in volume, so that way we can take these trades and take advantage of this volatility. after Wednesday, we are going to expect a more solid trend of which way we're going to go. Like we said, we're expecting us to bounce, and this is going to show us where the relative strength is going, and this is going to show us what stocks are going to be seeing the most buying strength as well as the most selling strength, and we're going to be able to capitalize on both the upside and downside. So here I noticed I wrote support 430. This is supposed to say resistance 430. And support is at 410. So this is our trading range that we're looking at this week. I apologize for that. So what we're going to need to see this week is going to be a break above 430 to take us towards this next 440 resistance here to create our next trading range. Once we break above 430, this will now become a support line, as it was a resistance line. We break above it. It's now a support line. You want to see us come back down and test this here for a bounce to solidify that support. As we mentioned, we're really not expecting too much. We are going to likely see a strong bounce if this does occur, but for us to see a solid uptrend and come back to these highs again by this highlighted area here, this is going to be the most bullish area for us. Anything below 410 is going to be very bearish. So for us to be back in safe territory, the safest territory, and to see new highs and continue a rally, we are going to need to break above this 458 resistance here, which also happens to be a very strong double top. As you can see on that second top that we formed, we got rejected and came right back down to that low price and actually broke below and came down to 410. Other than that, those are really just the key events to focus on this week. Any other developments with the Russia-Ukraine situation is obviously going to affect us if it is a big deal, but the main focus for the market this week that is going to give us a big change in direction is going to be the Fed meeting on March 16th. This is actually a two-day meeting, Tuesday and Wednesday, but March 16th is going to be the main day where we are going to get the biggest move. Aside from that, that's really just all I wanted to go over. Short and simple, straight to the point. If you guys enjoy this, please give us a like, subscribe, and we will be back with another video next week. Thank you for checking us out.